Among the major cryptocurrencies, Avalanche or the AVAX token has been by far the worst performing. The question is why? Why is it going down so much? And does it make sense to buy now? Because in the end, crypto is all about buying low and selling high. And obviously, currently we are rather low. Have a look at this overview here. Avalanche is the 13th largest cryptocurrency. And in the last 90 days, it lost 42%. Now, this is more than any other cryptocurrency above that, even Dogecoin, which deflated quite a bit. That's then how this looks like on a US dollar chart. We went from roughly $54 to now 24. When most investors are in losses and when people give up, then it might make sense to buy sometimes. But only sometimes. We have seen historically way lower prices. Now, why did we see those low prices? It's because everything went down. And that's the problem with US dollar prices in general. When we look at an asset denominated in US dollars, we don't really know what happens, relatively speaking, within that asset class. So let's say Bitcoin goes down, then a lot of altcoins go down as well. When Bitcoin is rising, a lot of altcoins go up as well. So it's all about relative performance. How much more can we outperform or how much more do we underperform? And so instead of looking at the US dollar chart, I think it's better to look at relative valuation charts. For example, this one. This is Avalanche relative to Bitcoin. The chart starts in October 2021, and over time, AVAX did not outperform Bitcoin. Over the course of 3 years, AVAX underperformed Bitcoin on average by roughly 80%. There are our temporary rallies here and there, right? This is an outperformance of 260%, but over the long term, Avalanche did worse. Now, why is that? Usually the answer is pretty straightforward. Most altcoins tend to underperform Bitcoin because the supply of the token tends to expand, because early investors and the team, they get token unlocked over time. Now, when the supply grows quicker than the demand, what happens with the price? It tends to do poorly. Here are the tokenomics of Avalanche, or the supply over time. We had massive token inflation in the early days. AVAX launched with 40 million tokens. It's now at almost 500 million. So that's more than a 10x. And the supply will continue to go up. But it won't be that bad because relatively speaking, right, compared to the current stock, the additional growth will not be another 10x. It will be less than a 2x. Now, I always think it's interesting to look at what is happening in the overall market, because obviously what happens to Bitcoin and the rest does impact Avalanche as well. Now, what also impacts all of those prices are capital flows. So how much money is flowing, for example, from traditional finance into crypto? How many people use their fiat to send this over to a centralized exchange to then get stablecoins to then trade, for example? That is what we can see in this chart. This is the stablecoin market cap over time, or at least the major stablecoins. So we've got DAI, Tether, USDC, and BUSD. And sometimes the market is contracting, sometimes the market is expanding. When this is going down, this means people are withdrawing from crypto. So people want to get their fiat back. When this is going up, then people tend to send their money to, for example, Binance. Binance then sends this over to, for instance, Tether. Tether takes custody of the funds and then creates the adequate tokens on chain. And we can see the creation and the destruction of the stablecoins in this chart. Now have a look at April 2022, right? This vertical line when we started the contraction, when people started to withdraw money from crypto and used it in the real world. And compare at that point in time with the Avalanche dominance. So with how much of all of crypto is in AVAX. Isn't it fascinating how Avalanche tended to underperform the rest of crypto while the stablecoin market cap went down? So we're not even talking about the US dollar price. We're talking about relative performance, about underperformance. In other words, Avalanche tends to be somewhat of a levered bet on crypto. When money is flowing out of crypto, then Avalanche tends to perform worse than the average. That's what we can see with this connection, right? It's very clear. Avalanche lost 3/4 of its value relative to the rest of crypto, while the stablecoin market cap deflated. And the drop of the stablecoins isn't even that much, right? It's only 28%, but something like like AVAX reacts very aggressive to that. When the money flows into crypto have a slight cough, then Avalanche gets a very hard fever. Now one might expect that the opposite is also the case, right? When we see an expansion in the stablecoin market cap, so in this case 76%, Avalanche should be doing better. And initially that was true. AVAX did outperform the rest of crypto by 250%, but then it came back down. Now why did it come back down? I believe again that's token inflation. It's simply just the continued sell pressure from the insiders and from the early investors. As long as we don't see a very rapid crypto expansion, a lot of money flowing in, AVAX has a hard time. On the other hand, right, we have already sold off quite a bit. One might see the 0.3% of all of crypto being AVAX as a potential bottom, but maybe we fall a bit further, right? This is a drop of 60% and this is a potential gain of 300%. But all of this is just price movements. All of this is just relative performance. It doesn't say much about the usage of the chain. Let's look into this now. Here is DeFi Llama, and this shows the total value locked on chain, and it shows the change also. Avalanche is the 10th largest blockchain. It's got $1.2 billion of value, and in the last month it fell by 11.5%, pretty much in line with the average. This bull run though has not been that great for Avalanche. The overall crypto DeFi market, right, the total value locked across all chains, it's not at an all-time high. DeFi Summer was still higher, but it did recover quite a bit. It went from 36 billion to currently 110 billion. So roughly a 3x. That is not true for Avalanche. Here's the total value locked development for AVAX. The DeFi Summer was great for Avalanche, 11 billion at the time in total value locked. Now we are only at 1.2 billion. And we haven't seen much growth at all in the last year. Very different to the entire market. Now, there are two major narratives in this bull run. It was meme coin trading first, and afterwards artificial intelligence, AI agents, etc. Unfortunately, Avalanche wasn't able to capture either narrative very well. The major meme coin on Avalanche is still Tokenomics. And the Tokenomics run was quite impressive. We covered it very early on this channel when it still had a multiple X ahead of it. But have a look at this, right? This is the meme coin transactions on Avalanche. This is Tokenomics. The Kok is dominating everything else at 77%. But have a look at Tokenomics versus Avalanche, right? The relative performance. It's still the best of the meme coins, but from the top to the current price, we are down in relative performance by 74%. Who wants to trade meme coins when even the most successful one is doing that poorly relative to the ecosystem token? Compare this with Solana, right? Solana has pretty much only meme coins. The meme coin trading on Solana exploded, especially the pump.fun ecosystem trading got a lot of traction. And here we've got the largest trending tokens on Avalanche. It's not all meme coins. It's old DeFi. GMX has been around for a long time. Pangolin is one of the decentralized exchanges. It's not even that large. And we've got staked AVAX, liquid staked AVAX over here, etc. So there's nothing really exciting even among the largest tokens on the Avalanche chain. Now, sometimes trading statistics, etc. get inflated and deflated simply just by the different prices. We don't really see how the capital flows happen. That's why it's good to just look at the stablecoin developments on different chains. So here's what I mean. Have a look at the USDC total supply on different blockchains. Avalanche is in red and Arbitrum is really taking the lead. A lot of money, very solid, stable money went into Arbitrum, more than 3 billion. Avalanche is just hovering along at roughly 500 million. There isn't much more money getting in. What I find interesting is this statistic over here. I can't really explain what's triggering this. On the left side, we've got the total transfer volume of stablecoins across different chains. And Avalanche isn't really that low, right? The deposited stablecoins are low, but the transfer volume isn't. But here's what I cannot explain. I'm surprised that the average volume per transaction is that much higher for Avalanche compared to other chains. An average stablecoin transaction on Avalanche is around $10,000 to $15,000 in size. It's very different to the other chains, right, where it's only around $1,000. Where does this delta come from? I don't know. If you do, feel free to share this down below in the comments, right? It's always interesting to see what's going on under the hood, where it's not that obvious just from the data. Here's the trading volume of Avalanche over time. So that's on the decentralized exchanges, and it seems like the medium and large retail buyers take over more and more of that trading volume. In the last few weeks, it tended to go down, but still, it seems like more and more of the trading volume is by medium retail. The big whales aren't necessarily trading that much. Small retail isn't moving that much capital either. It's for whatever reason medium-sized retail that's taking over AVAX. When I look at this data, I cannot shed the impression that a lot of activity on Avalanche is actually automated via trading bots, because there is no more money flowing into AVAX and there is not a lot of trading volume. But on the other hand, we do see how the number of addresses that transact on Avalanche tends to creep up. So those might be just bots that arbitrage trade back and forth with the existing capital, maybe comparatively small transactions. Really, there are two ways to make money in crypto. Either we try to find the needle in the haystack, right? The one altcoin that does a multiple X return. And during a bull market, this can be a viable strategy, especially if we've got a lot of on-chain analytics. But during a market that is not expanding that quickly anymore, it's a very, very dangerous game to play. The second approach, and the much less common approach, is to get the odds in our favor, not against our favor. So we don't try to find the 25% that outperform. We just bet on the 75% to continue to underperform. So we bet on falling prices of altcoins that we think are especially weak. For example, here, right, I've shown this several times on this channel. This is the Balancer altcoin, so that's a decentralized finance token relative to Bitcoin. And this is a very constant underperformance, and we can make money with that underperformance. In the last year, Balancer underperformed Bitcoin by 75%. This can be alpha. We can make money 75% in a year when we bet on Balancer doing worse than BTC. The reason for the underperformance is of course tokenomics, and this is why most altcoins do so poorly. Over time, the early investors and the team gets token unlocks, right? They get more and more allocation that they can then sell, and of course after a while they do sell, right? After years of development and after years of waiting, they do sell the allocation, and that then makes those altcoins do worse compared to Bitcoin. Of course, when all of crypto is going up, then the altcoins go up as well in US dollars, but they don't go up more than BTC. That's why we see this long-term underperformance. And so I made various tutorial videos on that approach, right? On not trying to find the one lottery ticket, on simply just compounding money high and consistent over time. So this is how to win in bear markets by shorting altcoins. There are more than 100 tutorial videos in total. This is all part of premium. It's not just all about betting on falling prices. It's also about risk management. It's also about portfolio allocation. It's also about on-chain analytics. So feel free to check it out. It's currently $125 US per month, and there's also a 1-week money back guarantee. So in case you don't like premium, just message me within the first 7 days. Feel free to binge watch all the videos. Message me after 7 days, and if you did not get enough value out of it, I'll refund you 100%. Really, zero questions asked. There's zero risk for you. Looking forward to seeing you again here on YouTube. Feel free to also give this video a like. It helps the channel grow, and of course, see you also in premium. Cheers.